guys, this is Mommy Beluga Investing.
Hi there, back again with me Rati in Mommy Beluga Investing. In this video, I'm going to analyze Starhub Ltd with stock symbol CC3. I'll tell you some of my personal reasons to analyze Starhub. Okay, first, our family is a Starhub pretty loyal customer. We've been using Starhub internet service for more than 10 years, through thick and thin. Okay, two, analyzing Starhub will help to build my view about telecommunication landscape in Singapore. I have previously analyzed Singtel, which will be a good comparison. Okay, my quick take for Starhub. First, it seems like a dwindling business who's currently fighting to stay relevant through exploring new avenues for growth. Two, it has super high dividend payout ratio, but not so great dividend yield. Three, expensive valuations compared to its fundamental. Four, from those points above, I'm not interested in making new position in Starhub. Follow my video as I quickly discuss the company's profile, EPS since 2004, dividend and other numbers. Please consider to subscribe because it means a lot for a beginning YouTuber like me. If you have any comments or input, do not hesitate to put in comment section. It'll probably help me to get more perspectives and learn more, or probably making better analysis next time. Okay, before getting into the data in a quick company profile, I'll read out the disclaimer. Okay, disclaimer, this is an amateur video. My main intention is to record my own journey learning and practicing investing from scratch. Over time, you may find some inconsistencies on my analysis and conclusions. Please bear with me. My analysis is limited to only public data that I can find, as well as the scope of my knowledge. Both of those items are changing over time. Hope I will be able to keep improving my analysis over time. This video shouldn't replace any financial advice and neither suggestion to take position, buy or sell in the stock market. Please conduct your own research before making any decision. But if you do your own research, I hope this video could be useful somehow. Okay, now let's start from a brief company's profile. Okay, Starhub was founded in 1998, not that long ago, and listed in Singapore since 2004. Starhub Ltd is most commonly known as just Starhub. It's a Singapore multinational telecommunication conglomerate and one of the four major telcos operating in the country alongside MyRepublic, M1 and Singtel. Okay, I've covered Singtel before and I placed the link to that video in the description box below. The logo have changed slightly since its founding. It used to look like blue starfish stepping through yellow door and turn into green starfish, just like that we see on the screen. The new logo showing a green starfish stepping through a green door and turn into a white starfish. Okay, according to the company's website, Starhub operates several subsidiaries. The first one is Starhub Mobile Private Limited that provides service and equipment for retail mobile telecommunication. Okay, the second one is Starhub Cablevision Limited that provides subscription-based television and broadcasting services. The third one is Starhub Online that provides internet broadband access services. Starhub Shop Private Limited, Starhub Inc. and Starhub Hong Kong Limited are dormant currently. Nucleus Connect Private Limited provides wholesale of broadband services. To put it simply, this company sells Starhub broadband to other internet providers. The sixth one is Ensign Info Security Private Limited that provides computer systems integration activities and security. 7. There's Stratic sendirian berhad that provides system integration, supply and implementation of hardware and software solutions and provision of maintenance services. Some of the industry that it supports are petrol station retail, logistic, hospital information system, etc. Okay, from 2020 Starhub's annual report, the majority shareholder is Temasek Holding Private Limited. It held its shares through multiple level of subsidiaries, as you can see from the screen. Okay, so that was a quick look at Starhub profile. Now let's take a look at the company's performance. So here I plotted, as usual, earning per share for the last 16 years since 2004. That is a year when it became a public company in SGX. I also added a horizontal green dash line as a guide to zero level. Earning below this indicates that the company is recording a loss for that particular year. At a glance, we can see that Starhub has not recorded any loss. Okay, it's a good thing since it was listed in SGX since 2004. Okay, though there was some earning dips in 2010 and then continuous decline since 2014, unfortunately. Okay, so let's go through the dips and the decline to get further insight about Starhub. Starhub earnings increased rapidly, from 2004 till 2006, the first 2 years after it became a public company in Singapore. Its earnings plateaued from 2006 till 2009 and then dipped in 2010. From 2010 annual report, the chairman mentioned that the earning decrease was due to competition increase and several spending for infrastructure. One of the significant infrastructure investment here is the launch of Nucleus Connect, a wholly owned Starhub subsidiary that builds and operates active infrastructure for next generation new broadband network. I recall 2010 was one of the advent of smartphone. I myself did not use smartphone till 2013. I was a late adopter. Starhub have been spending rather significantly to subsidize the handset purchase in exchange for 2 years contract. That year was also when iPhone was becoming available for other telcos, where prior to that was only available to Singtel customer. So it seems that 2010 or 2010 was a case of temporary growing pain. The result from 2010 investment starting to bear fruit the following years, as earnings increased again until it reached the plateau in 2014. Since 2015, Starhub earnings have been consistently declining until 2021, the current year. The steady decline in earnings requires extra attention. Okay, so let me start with 3 initial questions. Okay, what's the underlying issues that caused this declining performance? What are the management moves to reverse this? And will Starhub be a turnaround company? Okay, so back to the declining performance still since 2015. The major transformation to seek for new greenfield only happened in late 2018. Okay, 2018, the company, Starhub, started a DARE or D-A-R-E transformation. I take that from the onset of declining in 2015, it took about 3 years to realize that the company can't operate as usual anymore, okay, or start to implement ways to address the decline. There are a lot to unpack from DARE or D-A-R-E initiative here. The D stands, DARE initiative 2018, The D, stands for delivering market-leading customer experience. I agree to this. As far as my experience as Starhub customer, it's been very difficult to get customer support over the phone. My husband and I combined have only been able to speak twice to Starhub customer service on the phone in our 10 years-ish tenure as customer. In both occasions, we had to wait on the line for more than 30 minutes while some music playing. Okay, then the A stands for accelerating value creation. Okay, the R stands for realizing new opportunities. And finally, E stands for enhancing digital transformation. According to 2020 annual report, 82% of DARE or DARE initiative has been completed. My understanding is that we should be able to see some positive impacts from the EPS. Okay, however, by looking at the EPS from 2018, till 2021, this year, the transformation doesn't seem to be able to reverse the performance trend yet. At least not yet, yeah. As we can see on the screen, the EPS is still in declining trend. Additionally, since still according to 2020 annual report, Starhub also received pandemic-related government aid in the form of Job Support Scheme or JSS. However, the number is not explicitly mentioned in the annual report. It was lumped into 40.4 million other income. If we compare to the previous year, 2019, the other income was only 11.10 million. So there's a big difference there. Now to see in more detailed view, the effect of the transformation, whether there is effect, I superimpose Starhub sources of revenue, and here you can still see the EPS as the red round markers connected by a thick red line. The first one here that we have here is the revenue from its mobile service over the year. The mobile service segment is the main revenue so far that we can see. So far as Starhub mobile customer, I'm quite happy with its service. I still remember back then, pre-COVID era, the good old days, when I and my family still could travel. We were happy to have Starhub for its ease of roaming. We didn't have to do any sophisticated thing or switch to other providers. We were just to cross to JB or Batam for a quick trip. Okay, nonetheless, we can still see a decline since 2017, though customer like me may still be happy with Starhub. The second income source is pay TV service. This used to be a reasonable contributor, but now it seems to be abandoned by customer. The numbers getting smaller and smaller. Most likely it didn't compete well with other video streaming services. A noticeable decline happened between 2018 to 2020. The most noticeable drop happened last year, 2020. I can see this trend from my own household even. In the house we have Netflix and Amazon and occasionally some other services. So far we don't see any need to get back to pay TV from Starhub anymore. The next income service is broadband service. At a glance, the revenue from this segment seems to be pretty stable, though we can also see slight decline, 2016 to 2017 and after. Enterprise fixed revenue is the next income segment where the revenue from segment seems to improve. So far this is the only segment where it improves in the past few years. Sales of equipment is also at a glance seems to be a growing segment. However, this segment does not contribute much to the profitability. In most years, this segment record a loss. One of the factors is that the subsidy given to the customer that purchased a handset with a contract. Next, cybersecurity. The segment seems to be pretty new. We only can see the income in 2019 and 2020. The cybersecurity segment is contributed by Ensign and its subsidiary decrypt. And finally, ICT. The revenue from ICT segment is contributed by Stratec. Currently, this segment has not contributed to Starhub revenue yet, since the acquisition of Stratec has just completed last year in 2020. Seems like the cybersecurity and ICT are the two new greenfields that Starhub is currently exploring. At a glance, the two new segments improve Starhub revenue, but doesn't seem to improve the profitability that much just yet. As the latest report, Ensign and Stratec still operating at a loss. Okay, the next question for me is whether Starhub is financially capable to continue with the remaining 18%-ish or less of the DARE transformation. Okay, to see Starhub capability to finance the transformation, here I plot constituent of the current ratio. There are the cash equivalent and the current liabilities. And you can still see the APS here as the red round markers connected by a thick red line. It seems to me that Starhub is a highly leveraged company by looking at the screen here, at the plot we have on screen here, where their current liabilities is much higher than their cash and cash equivalent. So far, I feel that Starhub will have a long road ahead to turn the situation around. Okay, that was Starhub's liquidity ratio since 2004. Now let's look at the company's dividend history. Yeah, so far it seems to me doesn't paint a very good picture, but let's see the dividend history. To see the sensibility of dividend payouts, so here I plotted 3 layers of information. The first one is the dividend payout itself over the last 14 years, which I plotted as red round markers connected by a thick red line, as we can see on the screen. On each of the points I have annotated with 2 numbers. The number above the markers are the dividend payouts in Singapore dollars, and the ones below, okay, are the dividend payout to the respective year's earning per share in percentage. As a comparison to the earnings, here I plotted back the earning per share as a thinner red line with the same color. At a glance, Starhub dividend payout has been pretty concerning, yeah. In most years, most of the earnings are distributed as dividend, especially between 2016 to 2019, where dividend payout ratio is higher than 80%. There are a couple of times also that Starhub paid out more than its earnings that are in 2010, 2011, and the previously mentioned 2016, 2017, 2018, and 2019. Now, okay, let's continue, with dividend, what dividend hunter may waiting so far, the dividend yield history. Okay, here I plotted as usual the average dividend yield per year as the round markers. At each markers I place an arrow bar as usual, which represents the range of yield over that year. The variation in a year is caused by the volatility level of the share price. The yield increase if the share price decrease, and vice versa. We can see that the dividend yield is definitely better than bank interest. Depending on how good is your market timing, getting 5% yield doesn't seem to be that difficult. The majority we can get around 3.5% per annum per year. So far, I'm not that excited, though the dividend yield is quite okay, but looking at the company's overall situation, I'm not that excited. But anyway, let's see the market valuation. Okay, to see Starhub's market valuation, here I plotted 4 layers of information as usual. They are: first, the price, which represents market valuation of the company. It is also the easiest information that I can obtain. As usual, I can just search the search term Starhub share price and it will pop with this kind of graph. But price alone, as we all know, sometimes misleading for the value of the company and its prospect. So I'll include some fundamental indicators to help me to decide. The second layer of information is the 10 times earning multiply, which here I plotted as a dashed green line. 10 times earning multiply can be considered as the price where price to earning, that is the PE ratio, is 10. For me, I consider 10 times earning multiply has two purposes. The first one, that it indicates the price where I expect where I have higher chance to break even within 10 years. You could plot 5 times earning multiply if your investment horizon is only 5 years. Second, as a consequence for the first reason, I consider the share price above this 10 times earning multiply to be expensive. The third layer of information is 15 times earning multiply. With the same principle as I mentioned before, with 10 times earning multiply, price above this indicator will be deemed as expensive. Here I plotted the 15 times earning multiply as dashed yellow line, just like the traffic light. I start feeling nervous if the price crosses this line, particularly for non-growth company. The fourth layer of information is the 20 times earning multiply. Here I plotted as dashed red line. I will consider the share price to be super expensive if it ever crossed this line. For non-growth company, I consider to cut down my position if this happened. So now let's see what's going on with Starhub share price. Quick assessment, as we can see that market is pretty cautious with Starhub performance. So far it did not move too far from 10 times earning multiply. It enjoyed price rally since its IPO between 2004 to 2014, which was actually supported by the increase in the company's earning, as we can see in the previous slides on EPS. Similarly, as the earning declined from 2014 to 2021, so did the share price. The second quarter 2021 report didn't show any profitability turnaround, unfortunately. Without any profitability turnaround, considering how the market has been valuing Starhub stock, I'm afraid that the share price won't be recovering anytime soon. So now what's my reasonable price? At its current state, I'm afraid my reasonable price is 70 cents per share. Considering that the current price at 1.23 Singapore dollar as of 3rd of September 2021, when this video was prepared, Starhub current share price is still expensive. Though it's trending downward since 2014, the price may not reach its bottom yet. And I sincerely hope that I'm wrong, since my husband put some of our investments in Starhub with the average price of $1.6 per share. Okay, the DARE initiative is about to be wrapped up around the time that this video is prepared. Another initiative, which is called DARE Plus, will be announced in November 2021. But until then, we just have to wait. Okay, so now conclusion. It seems like Starhub is a declining business that's fighting to stay relevant by exploring new avenues for growth. It has super high dividend payout ratio, but not so great dividend yield, as we can see in the video. Expensive valuations compared to its fundamental. From that consideration, I'm not interested in making a new position in Starhub. But I do hope the situation gets better, because my family, have already had some positions in Starhub. Okay, that's all for today. Thanks for watching. Don't forget to leave your comments, and if this video is useful, as usual, please subscribe to my channel. It's free for you, and it means a lot for me, a beginning YouTuber like me. Okay, that's all. Goodbye.